Hey, this is Sasha. Thanks for joining me in today's episode. What we're going to do is something a little different. We're going to go in and do a case study. And today's stock of the day that we're going to check out is Uber. So let's check it out, see how it's doing, and give you some insights behind it. All right, so there's a lot of people that are interested in investing Uber, especially it's a very popular company, something that you use on your cell phone quite often and frequently, especially if you don't have a car. And I know that over the last couple of years, it's continued to gain some ground, popularity, and momentum. In fact, even my mom started using Uber and Lyft not too long ago. So what I want to share today with you is a little more insight on the stock. What's going on, what's happening. Maybe you should invest in it, maybe you shouldn't. So I'll give you my take, give you some insight, and maybe a plan of action or some things to think about. So first, let's check out Uber overall. So what in the world is Uber? It's basically a application, you could say a software company where you go ahead and get deliveries. It's taxi cab, you could get a ride sharing to go somewhere, but it's a fairly new company as far as the IPO is concerned. Now, currently, as of recording this video, the stock price is right around $28 or so per share. So when you look at this company, it is fairly new, and this is why it's attractive, because with such a new company, it gives you really, really good potential for skyrocketing returns. I mean, you look at this company, it's just started out somewhere over here. Now, unfortunately, the stock hasn't been doing well, and you can see what happened. We hit the IPO, we've launched. Stocks kind of traded a little bit sideways, had a few little pops here and there, but overall it's been kind of going down. But what people are really interested in is the performance of it. How's it going to go? Is it going to be something like a Facebook where after a little bit of time, maybe a little bit of a down movement, just like Facebook had over here, will we get that rising trend over the next few years? Because that's really what people are interested in. If you look at Wix, same thing. You had an initial IPO, stock went sideways, a little bit down, and then continued to move higher. If you look at Shopify, again, very similar sideways action and then continued. So that's the big question when it comes to Uber. Is this going to happen with Uber? And that's what people really want to know. And when you look at this, Uber, you have to recognize that just searching for is Uber a company profitable? There's a lot of different reports, and you can really dig deeper into the SEC filings here, which we will get into in just one second, is that Uber is not really a profitable company. So you can see it reported an operating loss of over $3 billion. So that's a huge sum and quite a lot of losses when you're looking at it. Also, when you're looking at other companies that invested in Uber, you can see here PayPal invested in Uber, which triggers them a huge write-off of $228 million. So it didn't really pay out for PayPal to go ahead and invest in Uber. Now, looking at a lot of different things, one of the ways that the company is trying to stay profitable is really by doing layoffs. It's the cheapest way to cut costs, but sometimes it doesn't work out for the best because now you don't have employees that help you out to build the company, make it better, market it, whatever the case may be. So when you look at this, you can see Uber announces another round of layoffs. This is the way that companies stay profitable because now they are able to appeal to their shareholders, meaning they're able to hit their profits a little bit better quarter after quarter. What's the easiest way? Well, you could go ahead and cut employees. And by doing so, just let go, right here, you could see 400 people from the marketing team, because I mean the app's already really made. I mean, how much more development is there? It works, right? I mean, maybe there's a few glitches here and there, but what you need is exposure. You need more people taking rides. You need different types of rides. You need that service sector to continue, and you need more drivers. So this is how you go ahead and make more money. And if you're leaving your marketing team, with 85% of those laid off working in the US, 10% in Asian Pacific region. And you can see they're continuing to do cuts in order to hit their shareholder needs and their profitability. So basically what they're trying to do is cut costs so that they could go ahead and show better on their earnings reports and on their profits, the bottom line. That's what investors want to see, right? They want to see the company's profitable. They don't care about the employees. Now, when you look at their filings, here's a really interesting thing to take a look at. And you just go to the Uber website here, which a lot of people don't really do. And you can see, hey, here's a quarterly reports. You could get the SEC reports, which we'll check out in just one second. But I want to show you here is when you look at the SEC filings right here and you look at the PDF documents, these people who own a large amount of shares or maybe are part of the company, they have to disclose what's going on and what's happening and what is it that they're doing. So here it may look like, okay, well, what the heck does this form mean? Well, it means that the U.S. Security Exchange and Commissions in D.C., it shows the statement of changes in beneficial ownership of the security. So here in this case, this person went ahead and divested, right? So here, let's zoom in a little bit so you could check it out. So are you acquiring or disposing of the stock? And you can see reported transaction right here. So it's not a small amount, right? And you can see they're divesting, disposing of these kinds of things. They're getting rid of their shares at a certain stock price. And you can see right there, there is the amount, the price that they got rid of it at and the amount of shares and so forth. So you could see, hey, direct or indirect. And, you know, you could go through this document, but this is what you're interested in because, hey, if these people who own a large amount of shares are getting rid of these kinds of things, well, why in the world would you invest? Look at this. This is another one, also getting rid of shares. Of course, they have to disclose this, so I'm not saying that just because they're saying these things that all of a sudden it's totally a bad company. Sometimes people own a large amount of shares, and then what happens is, hey, well, I got to get rid of it. I'm cashing out, right? But you can see a lot of these, you know, they're not acquiring shares. When a company is really profitable and when people who are working in the company and they're interested in the company and they see big growth, they acquire more of the company. And that's ultimately what you normally do. But here, just looking at a bunch of these, you can see they're getting rid of the shares. They're disposing of the shares. So anyways, that's one thing to be really cautious about and a little bit of a red flag, honestly, if you're looking at it and saying, hey, man, the owners or people who are really working in the company or people who have to disclose things, they're getting rid of the stock. Hey, something just doesn't look right. Anyways, here's another couple things. If you look at the financials, again, some more things, 316 billion on losses. And, you can see definitely not a good thing. And if you look at the current level 1 kind of triggers, the market cap is huge, but when we're looking at, and there's a lot of volume, obviously. So the volume traded is also quite big. So it's a very popular company, but is it popular enough and worthwhile enough to invest in? Is it going to make you money? That's kind of an interesting question. And when I look at it, and you look at the S1 revenue here of the growth and losses, you can see that right here, a lot of this happened, okay, is basically the company noted that 3.2 billion was gained from divestitures. What does that mean? Well, it's not investing, it means divesting, which basically means they're selling off the investments that they had. So otherwise, the company would have been at a loss. So that's the interesting part, is that ultimately, it's not looking good. So if you look at the S1, here's an interesting thing. You can get these S1 things at sec.gov. So you can go ahead and look up the company. So as you check these things out and you start scrolling, there's a lot of details in here. And really, you could spend tons and tons of time reading these things. This is kind of what Warren Buffett does. But it gives you kind of a breakdown. It's almost like a little mini book on the company of what happened this quarter and so on, because this is required by the government. So anyway, long story short, you could dig deeper into all this. Uber Freight, you know, they have all kinds of things. What are they looking to do in the future? What's the right thing? Company motto, all those kinds of stuff that they're really ultimately trying to do. And you can see, starting with supply, creating liquidity, network effect, blah, 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 blah. And that's kind of their system. But down here also, what you get into later as you continue this scrolling process, you can get into a lot of the documents here. So even though here you can see the revenue 2016, 2017, 2018, you know, it looks and continues to increase, which is also good. You know, there's other income. So you could really break this down, but ultimately, you know, what's the bottom line? And you can see right here, here is net income loss attributed to Uber technology. You can see it's had a couple of losses here. 2018 looks a little bit better, but ultimately still that company is struggling, because by the time you pay taxes and a lot of other expenses, they're trying to go ahead and make these reports look good, right? What do some companies do in order to hit their earnings? Think of it this way. Shipping companies will pre-ship things. Like if you make a product, right, they'll pre-ship things a quarter in advance. Hey, please buy our product. So that way we could put that on our balance sheet. In that case, our earnings look better for this quarter. Now, what do they do next quarter? Well, you're constantly playing catch up. And this is the cycle that continues to run, but they're dealing with billions of dollars. Eventually that steam runs out and they have to either catch up either in the Christmas time or make a loss in one of the quarters. But this is really what goes on behind the scenes. And this is why this company, they got rid of their employees in some areas, the marketing team, all that kind of stuff. And that ultimately, when you do that, you're pretty much eliminating your workforce, but it allows you to save a lot of money. So anyways, they also talk here about EBITDA, which is net income, excluding income from losses, discontinued operations, net income. So there's a lot of definitions, and here they show you right there. At the end of the day, this is what some of the financial guys look at. What's the EBITDA? And here you can see loss, loss, and loss. So ultimately, at the end of the day, income, net income, benefit, legal, tax, regulatory, and so on and so forth. Anyway, you can continue to scroll through all on page 27, but ultimately, you could read all these things. You can see charts, graphs. At the end of the day, what's the big question? Well, I look at this. I look at my chart right here. And when I look at Uber, I want to see a growing company. And in this case, you don't have to be a rocket scientist. You just pick one of the oldest or most recent price points and put the current price point. Where is it now? And is it moving up or is it moving down? Right now it's moving down. What ultimately I want to see is once this company starts becoming profitable, you'll know, because if you're following the chart, what's going to happen is this is going to slowly turn and reverse course, right? Because the big boys are going to know. The big boys, the hedge funds, they're going to know. You don't have to be the first guy in there, because is it going to really matter if this stock, let me ask you a big question. If this stock goes to $200 a share, like some of the other big companies, if this stock goes to $200 a share, is it going to really matter if you got in it at $30 a share or $33 a share or $36 a share? No, it's not going to matter. So if you're looking at this one and you're interested in investing for the long haul, right now the trend is down. So what do you want to see? I'd love to see like a base for a little bit, boom, 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 and then eventually kind of roll to the upside. And if that starts happening, if you get certain little pullbacks, like let's say you go ahead, you're moving a little bit sideways right here, and then it comes up and it comes down, and then it starts making these lower or higher lows. So you can see there's a higher low and another higher low, and it continues on that trend line. That's a good thing to see, and that's when you want to get into the stock. Now, will it matter if you got in it over here or over here? No, not really. Not if you're looking at it for an investment purpose. But in the meantime, the trend is down, and do you think this could end up being kind of like a GoPro, where, hey, this stock just, it had its days, it looked good at the beginning, but now it's just, boom, 2-3 years later, it's flatline. So anyways, that's my thought on Uber. I think, I don't think it's a great investment right now, but I think, hey, if things turn around, it's building momentum. If it becomes more profitable, if they're able to do the right things to making it work, all of a sudden, hey, it could be a good investment in the future. But do you have to get in it right now? No, not necessarily. What's the rush? So be patient and allow things to set up in your favor. Anyways, thank you so much for joining me. Hope you enjoyed this video and little case study. Feel free to subscribe to the YouTube channel over here or join the newsletter list over there, where I can teach you about trading stocks, options, and the right way to invest. Thanks again, and I will see you next time.